If you hear the term segmentation, specifically market segmentation in the context of real estate, what does that mean? What is real estate market segmentation? So as an investor, it's really important to not look at real estate as a whole. And it's very easy to do that. Like, is the real estate economy up or is it down? And people tend to kind of stop there. Well, what market segmentation means is a little bit twofold, but it's this idea of not looking at the industry as a whole, but rather in segments. And you can do this in a couple of ways. For instance, looking at the commercial real estate sector versus the residential real estate market sector. Those two things don't always necessarily perform in the same direction. Commercial could be way down and residential's way up, or vice versa. And different impacts or things going on are going to affect those two segments very differently, potentially. The other way you can look at it is like actual market segmentation, like thinking of New York City versus Omaha, Nebraska, thinking of the way situations are going to impact different markets is different. And there's different property types. So when you're looking at real estate investing and you're looking at what impacts are going to come of whatever's going on in the world, right? If we're in a recession or who knows what's going on. Right now, it's COVID. How are these things going to impact real estate? You have to look at it from market segmentation standpoint, because how each segment within this industry is impacted is going to be very different. So always keep that in mind as you're pursuing investments and looking into different things, is how is that particular segment, in whatever context that segment is, how is that segment going to be impacted by different scenarios going on in the world? Because it's very important, because you want to be prepped for those situations to happen.